Hey everybody, Gary with Basecamp Trading. Let's take a look at how we were taking targets in gold and the ES today. Gold today was kind of sloppy. It was bullish early in the day. Then we left this reversal doji right here, triggered it to the downside. This was during the lunch period, and gold made a nice pull to the downside. And then we went into consolidation right in here. And once we got to this doji right here, we decided that we were just going to play bracket the dojis. So we put our channel at the top of this doji, put it at the bottom of this one, and then we were just waiting for a breakout on one side or the other to get in. We ended up consolidating for a little while longer. You can see we just chopped inside this channel for a long time. We chopped inside this channel for 2.5, almost 3 hours. But we were just chopping and we were waiting, and we finally got the channel breakout right there. And then gold made a nice push to the downside. We had the mid at 1702.30 today. And gold pushed right down to the mid just as it was touching significantly undervalued. We know once we hit the mid that we're probably going to stall, possibly even bounce, and especially if we hit the mid when we're touching significantly undervalued. So we just pulled it off right there at the mid, but still nice push to the downside. Our entry was 1705.60, and we were out at 1702.30, so a little more than $300 per contract, taking targets on that trade. And then we had some similar things in the ES. The ES gave us some good trades today, and is similar situation. The ES pulled down, consolidated during lunch, and then we broke out to the downside, and we pushed right down here to the 200 EMA. And you can see that the 200 EMA is significant in the ES. I mean, touched it there, closed above it, broke under it, closed above it, closed above it, touched it, closed above it. I mean, you can see that in the ES, the 50 EMA and the 200 EMA are significant on the 30-minute chart. And so we broke out a compression to the downside, pushed right down, hit right at the 200 EMA again as we were touching significantly undervalued, and we already had our order sitting there waiting to take that trade off. And again, that was a nice push down, $700 per contract potential on that one. And again, we knew that as soon as we hit the 50 or the 200 EMA, that we were very, very likely going to stall, possibly even bounce, because again, you can just see how price respects that 200 EMA. So we took targets there, consolidated, set up the bear flag, actually triggered to the downside, and again, could not stay under the 200. Ended up really taking that one off at break even, and then we just kept bouncing off the 200. We broke under it, closed back above it, and then this bar just kept bouncing on it, bouncing on it, bouncing on it for a long time. But we figured, we've been down here 4 times now. We were in compression at the time this bar was working its way to the downside. And again, it bounced off the 200 numerous times before it finally broke it and made a very, very nice move to the downside. We actually took our entry off the Renko chart on this one because we were in compression right there as we were bouncing off of this 200. And this is what that looked like on the Renko chart. It was this trade right there on the Renko chart. You can see we were in consolidation, just chopping inside this wide channel. We put our channel lines on here, and you can see we were just chopping inside this wide channel right here, and then we came down, and this right here, this channel, it happened to be right at where the 200 EMA is, and you can see we just hit it, bounce, hit it, bounce, hit it, bounce, came down, hit it, bounce, and then finally broke through as we were getting our compression breakout. So we had our wick off the 18. We took the compression breakout to the downside, and then down we went. I mean, it was just bombs away on the ES. And we had some downside targets in the ES. Our initial stretch target was at 28.81. Our entry was right at 29.01. So $1,000 per contract. And again, our target was sitting right there at 28.81 and a half. So our take profit order was sitting right there waiting to take profits. And that's the advantage of having like our gravity lines chart, for example. Here's our gravity lines in the ES, and you can see the ES actually dumped way below our target even. I mean, the ES just dumped into the afternoon, hit our 28.68 target, and just missed this 28.49 and a quarter target. So I'll be honest with you, I was bearish stocks, looking for them to go lower. I really wasn't anticipating them going that much lower. But you could see right in here's where we had that breakout, and then we got through this first gravity line, got through the second gravity line. Our stretch target was right here at this 28.81 and a half. Took profits there, and then actually continued to go lower. You can see we came down here, hit this 28.68, consolidated a little bit, and even pushed down below that. So honestly, left a little money on the table because I didn't trade any of these further targets to the downside. We were extended at that time. We had hit significantly undervalued on the 30-minute chart when we hit this first stretch target. But again, the ES was just so bearish that even while significantly undervalued on the 30-minute chart, it continued to push lower. And again, that's the advantage of having these charts that have our targets on them. It gives us something to trade towards. It gives us areas to take profits, helps us maximize our profits, and helps keep us in the trade. I mean, we can see we had targets. Again, I didn't trade this because we were significantly undervalued, but you can see we had targets, Trender Pro 2.0 giving us signals. You know, if you wanted to continue trading short, we had some targets to go for, but we were content. Again, my stretch target for the day was this 28.81 and a half. We came down there, took that out, no problem, and was a really good afternoon taking targets in gold in the ES today.